Hey, good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Remember, anything said in this piece is a opinion only. It's not investment advice, not financial advice. And if you make money, great. If you lose money, whatever. The idea is to broaden your knowledge. Let's kick off. So yesterday the markets went up in the US, in the UK, and in Europe. US were driven mainly by awareness or hope that the Fed is going to take its foot off the gas when it comes to interest rate rises. Remember, there's already priced into the market a 25 basis point rise in February, unlikely to go higher than that. And as I said many times, unless there's some shocking economic news or something comes out that frightens the Fed. However, rates will continue rising, but at a much more moderate rate. And that's given a lot of encouragement to financial markets. It's given a lot of hope that they're coming to the end of the interest rate cycle in the US. And that obviously is going to impact the US dollar, because as interest rates do not rise as fast as they did in 2022, then the US dollar will not rise as fast as it did in 2022. And traders in foreign exchange will start looking to other markets where there is likely to be an interest rate increase faster than there is in the States. And those markets and those countries are definitely the EC. So you've got the ECB looking aggressively to increase interest rates. Christine Lagarde has already said that many times. And in the UK, Andrew Bailey will increase interest rates. However, Andrew Bailey is a much weaker personality and unlikely to take draconian measures to taper the 10.5% inflation rate in the UK. So likely again, he'll probably increase, or the MPC will increase interest rates by about 25 basis points in the UK at the next meeting. Looking at equities, the big news was Salesforce. Salesforce is shot up. Salesforce is CRM. Salesforce shot up because Elliot Management has taken a multi-billion-dollar stake in Salesforce. Jesse Kahn, who's the managing partner at Elliot Management, said it's one of the leading data companies in the world. He's been following them for many years, and he's got a big admirer of Mike Benioff, which is the CEO of Salesforce. This follows on from Starboard Value, who's a hedge fund that actually bought also or invested huge amounts of money back in October. So Salesforce is getting a lot of attention. It's just also laying off 10% of its workforce. That's 12,000 workers, 12,000 employees. It's also reducing its office space and reducing overall its exposure to property and other areas to rein in the costs and increase the profitability. So Salesforce, very interesting to watch, likely to go higher over the next coming months. It's a superstar there, and we want to keep an eye on as regards Salesforce in the equity market. Now, Salesforce going up pulled up all the other members of the Nasdaq, other players in the Nasdaq. Microsoft went up. Also, Apple went up because India said that Apple's going to build a new factory or increase production in India for its iPhone 14. That gave a big boost to Apple to move away from the restrictions in China over to India. Remember, India is going to overtake China. India doesn't have any restrictions when it comes to COVID, doesn't have any restrictions when it comes to managing its population. It doesn't really, to be fair, doesn't really care about its population so much. So it looks like India is going to be the world leader. And if businesses want to relocate on a COVID-free passport to India or another country, it should be India, because it's got very large population, cheap labor, it's got infrastructure, and it doesn't have all the restrictions that China has in terms of being a communist regime and obligating you to be a 50% partner within the business. So India is a great home if these huge conglomerates want to develop and want to produce on a hassle-free basis. Tesla also, Elon Musk came out and said that he's got enough money privately to make Tesla private. That sent the shares up flying. I said for many weeks now, Tesla around about the 100, 101 was a buy. It's well above that, well into the 140s, and look like it to go higher, probably to about 160, 165. Could come off from there, but I think that's the level it's going to be at. I do believe and sincerely give the opinion there's going to be a major market crash in 2023. But for the near term, in the next week, 2 weeks, 3 weeks or so, you'll see rising markets as there gets more enthusiasm that the Fed is going to take its foot off the pedal when it comes to raising interest rates. And hopefully, there is hope out there that traders and investors are seeing the end of inflation in the US. I don't believe so. I think inflation is going to go much higher in the US, and we're going to have interest rates of 7% in the US. So I think there's a temporary measure, but we are heading, in my opinion, for a major market crash. Also, you'll probably, as I said many times, you probably will have further threats from China invading Taiwan. That is going to be a big one. I think they will do it during the Biden regime, because I don't think Kamala Harris or Joe Biden have got any particular nerve or any gumption to stand up to China. I think China will take the risk of invading Taiwan and making Taiwan under Chinese control. The world won't do anything because the world is very, very weak. As regards Russia, the war in Ukraine is going to continue. It's probably going to even pick up a step this year as they start using more and more hardware, the Russians more and more hardware to conquer Ukraine, and that will have an impact on oil and an impact on soft grains. So you can see soft grains rising in 2023 and oil. Interestingly enough, gold came down yesterday and then rebounded. Again, gold looks like it's going to go to the 22,000, 2,100 level per ounce, and oil is going to continue creeping up towards the $90, $95 level as the year goes on. Bitcoin, cryptos, Bitcoin solid at 22,900, 23,000. I'm calling it 25,000. I've been saying it's going to go there already for a few weeks. It's going to go to 25, test that level, and then probably come off. Foreign exchange, weak dollar, stronger pound, stronger euro, stronger yen, not so much stronger yen, a little bit stronger versus the US dollar, but the pound really is going to go on a run up to 25, 126. My target is 125 to 127 on the pound. As far as euro is concerned, you can continue seeing it creeping up to the 109, 110 level as long as interest rates keep on rising in the ECB, and there's still hawkish talk in the EC of raising interest rates dramatically. As I said earlier on, as Christine Lagarde has stated over and over again, rates will rise. US Treasury bonds 10-year running at 3.53. It's going to go to 4.5 this year. And the divergence between the 2-year and the 10-year is so wide, it's a clear lead indicator of a major recession in 2023, especially as layoffs and unemployment rises. That's going to impact significantly on corporate earnings, and you'll end up having more layoffs and more cost cutting as these corporates try to maintain their profitability. Meta, Facebook is a sell. Meta's going nowhere. It's a VR, virtual reality is a complete dead duck. Okay, and Microsoft pulled out of the VR, and that's going to send the whole sector down. It's not the time for VR. Money's too expensive, and they're really just blowing billions on developing it. Complete and utter waste of time. Sell Meta, and also if you want to have a long-term, sell Amazon and Apple. Okay, you can subscribe on YouTube. You can follow me on Instagram for much shorter versions, or on TikTok. This is Mayor Walensky with Driving Markets. Catch you later.